This is going to be a trade of the week recap on NASDAQ futures and the trade that I took on Friday, which was NFP day. And I want to do a top down analysis starting from the weekly chart because there were some things that I was looking at here as far as objectives goes, and go all the way down to my entry time frame, which was on the 1 minute time frame. So to start off here, this low right here, this weekly low was important to me because it was a swing low that was inside of a weekly fair value gap right here. So that's always important to me as an intermediate term low. It's something that is, if I'm bearish, it's going to be a really important target for me. So that is something that I was looking at as far as weekly objectives goes. And if we go down to the daily time frame. Let me get this showing up on the daily. If you go down to the daily time frame, this was actually already hit by the time Friday came around, NFP. So my weekly objective was actually already hit by Thursday. So you can see right here, this is the Thursday candle, and then this is the Friday candle right here. And Friday is going to be the day that we're covering. So that weekly intermediate term low right here was already hit. And so that is something that I was trying to frame like a daily bias off of, meaning this is Monday right here, Tuesday, Wednesday, Thursday. We had only seen lower prices at this point in the week. So at this point, I was thinking we could see a weekly retracement, like a TGIF retracement, where we see 20 to 30% of the weekly candle see that retracement because we had only been bearish. It was just a big candle down at this point. So I wanted to see, or I was anticipating that there could be some kind of retracement at some point in the day. So this low had already been hit. By the time that I was looking at the trade, this low right here, this Thursday low, was my point of interest. Now, I think it'll make it a little bit easier if I actually back it up so we can walk through kind of candle by candle what I was looking at. So this previous day low, just because this weekly low, this intermediate term low had already been hit, doesn't mean that we wouldn't see lower prices still. We could see a sweep of this low, this daily low, and then that retracement higher. And that is something that I was looking at going into the day. Um, so we can go down to the 4 hour time frame here. And this is where I really start trying to find and determine what's order flow looking like on the lower time frames beneath the daily. I start with the 4 hour right here. See what arrays are getting respected and what's getting disrespected. Is bullish getting respected, bearish getting disrespected, or vice versa, right? That's how I determine order flow on these time frames and what direction I want to be trading in and what targets I can look for. So starting on the 4 hour time frame at this point, let's kind of bump it up to Friday here at the 6 a.m., 10 a.m. candle, or the 6 a.m. 4 hour candle, which is going to be right here. Okay. So you can see at this point, this is the previous day low right here. It's still intact, and we have equal lows with it at this point. Are we respecting bullish or disrespecting bullish? Well, there's really no bullish PD arrays in this leg right here, right? And all of this price action at this point, there's really nothing bullish that is even on the chart, right? It's all bearish. We respected a bearish fair value gap right here, right? And we're currently trading in this 4 hour fair value gap right here. So this was kind of like my line of defense right here for bearishness going into the day. What I wanted to see was with this 4 hour candle, are we going to respect it and hold it so then we could look for this previous day low, or are we going to close above it so then we could look for something like this high up here and then higher prices like at these equal highs going into the day? What this candle ended up doing, this 4 hour candle, is it took out these equal highs right here and closed back within the range, and the previous day low right here was still intact. Not only was it still intact, but we had created equal lows with it right here, right? So at this point, I had established just a really strong and obvious bearish bias at this point. So um, This was literally going into the day. I do a pre-market outlook every single day, doing this exact process, and that's how I determine, my bias going into the day. And if I don't see anything on the 4 hour that I like say there wasn't a 4 hour fair value gap right here, I'm going down to the next time frame, the 1 hour, and I'm looking for really the same exact things, right? So we can take a look at what we got here. Not really too much to show. We have, again, that 4 hour fair value gap right here. We dug up on this 8 a.m. candle to take out these equal highs, which is also session liquidity, which I'm going to show on the lower time frames where it's a little bit cleaner. And same with this 9 a.m. candle right here, another stab higher. Okay, so 1 hour doesn't really show too much on this given day. So let's go into the 15-minute time frame here where we can really start breaking this down. So the 15-minute chart on this given day was really like just the clearest way to determine order flow, what we have already done, and where we could potentially be going. And let's break that down here real quick. Is remember that this previous day low right here was my primary target going into the day. As long as this was still intact, I was looking to be bearish and looking to target that. Okay, so I want to make that really obvious. We'll give it We'll make it bright red right there. Okay, so this is where I wanted to see price go. What have we done up to that point? Well, remember this was NFP. Okay, so this is Friday, and it's the first Friday of every single month where the NFP numbers are going to be released, and so it's going to bring a lot of volatility into the day, and it can give us a lot of good insight on what who's been manipulated and where we can target following that. So if we bring out my indicator right here to find session liquidity, we see that we have London highs right here. This high was created at 4 a.m., okay? And London session runs from 2 a.m. to 5 a.m. And we want to look for significant swing highs and swing lows up until that point. Also bring out my daily range divider just so we can see where Friday actually started. So this is midnight right here. At this point, we created this low during London. We traded up higher during London into that 4 hour fair value gap right here and started trading lower. Okay. This low still intact. Just because we took this low doesn't mean I'm looking for higher prices. I wanted to see this go lower. Okay. Took this low right here, and then on the release at 8:30, that is your NFP data release. And what it did is it manipulated all of the buy side liquidity above here in that 4 hour fair value gap. Traded higher, giant wick, and then closed back within the range below the new day opening gap here as well. And the new day opening gap is just the closing price at 4:45 p.m. and the opening price for the next day at 6 p.m. right there. I'm going to take these off just so there's a little bit less clutter on the screen, but just know that this area right here was really important to me. And it was a good sign that we were rejecting here with the bodies and the wicks doing the damage. And it gave me a little bit more insight that we were more bearish. Okay. So we had taken this high, and I wanted to see this stay intact. So data highs and data lows make for really good targets. And though data highs and data lows, when I say that, that just means whenever there is significant news, typically around 8:30 or 10 a.m., where news is released, if there are really large and obvious wicks, that is going to make for a great target. All right. Um, you could see right here on the NFP release that there's this really large and obvious wick. Well, you have to understand the significance of it and why I wouldn't expect this to get reached again is because what this wick was doing is it was doing the manipulation at this point. So I wouldn't want to see price come back up here until some significant sell side targets have already been hit, meaning this previous day low. So I didn't want to see something like this where buy side gets hit above these data highs and then we go lower. I would want to see this get hit first and then price would be allowed to come back up here. That was my scenario that I was looking for. We could see retracement but I just didn't want to see this high get taken right here because it had significance. It was taking London high, so it was taking session liquidity, and it was trading back into that 4-hour fair value gap. Okay, so this is all before 9:30 a.m. And when I see something like this, I have to play out a couple different scenarios in my head just so I can mentally prepare myself on, what to look for. Different scenarios, right? We're trading really close to this previous day low right here. So at 9:30, what we could do is just dump right away and then go higher. If we had done that, if we opened up and just dumped right here, then I would switch my bias to bullish and look for higher prices. Best case scenario, which is what ended up happening, is we leave this intact and generate more liquidity. Trade higher to manipulate people thinking that this is strong support and we're going to continue higher, potentially towards data highs up here. Um, but isn't what I wanted to see happen. I wanted to see a generation of liquidity, trade higher, and then give me the opportunity to go short. So that's what I'm really doing every single day when I'm coming into the charts is creating a bunch of different scenarios what I think could happen. And then once one of them does happen, it gives me that confidence to go in and it doesn't have me hesitating or thinking, oh, well, I feel like this could happen instead. No, I have to create these scenarios in my head, write them down, screenshot them. And so it really gives me that confidence to hold myself to my analysis and execute on it when it actually does show up. And it also is encouraging when it does show up because you can literally look at your screenshots and say, that's pretty cool. I was predicting that, and that's exactly what happened. So if we play this out right here, 9:30 opens right there and shoots up. That's the scenario that was most ideal for me because what it did was it generated these equal lows. This would have been a different, and hopefully this isn't getting too confusing or rambling too much, but this would have been different if ES had taken the previous day low. If we fail to take this low on NQ and shoot up like this, but ES did take that low, then I definitely would have been bullish towards this high up here. But you can see ES did not take that low. It created almost perfectly equal lows right there. So I was still bearish at this point. I didn't want to get fooled by this big movement higher right here. Okay. If we jump down to the 5 minute, I need to find some PD arrays on either the 15-minute or the 5 minute that support uh, price moving lower. Okay, and if we go down to the 5 minute right here, really I need to wait for some kind of obvious fair value gap to show me that order flow is lower, right? So this is the first fair value gap on the 5 minute created on the day. So that's something that I want to have marked right here because this creates a really good condition in price where as long as we hold this, because there's no fair value gaps on the 5 or 15-minute below here, as long as we hold this, I would expect to be bullish. If we close below it, like this, then I would expect to be bearish, right? Because that would be kind of like a change in the state of delivery. And remember what I said, I don't want to see this data high get hit up here, okay? So really, it's just a matter of waiting, right? That's a lot of what trading is. And you can see that price is trading higher right here. People are probably thinking that we're heading towards this high. Um, what I wanted to see happens where we hit this 4-hour fair value gap and see a really nice rejection at this point. So honestly, when price is trading higher like this, in my head, I'm thinking, okay, we could just keep up running towards these highs, and I'm wrong, right? You have to accept that that could happen, and in your entry and what you're looking for just isn't going to be there, and then you have to change your bias and switch your viewpoint at that point in time. But whenever I see this reaction right here, then all of a sudden I'm thinking, okay, what I'm wanting to see is it's looking like it's starting to come into fruition. So now I need to just wait and be prepared to execute. Hit this 5 minute fair value gap. We can check the 15-minute, see if anything is going on right there. No. Okay. But what we've done is we've created this 15-minute fair value gap, which is a little bit concerning for shorts because now using just this 5 minute fair value gap alone, a close below it, it's not nearly as high probability because we're still trading into this 15-minute fair value gap at this point. So that's why it's important to really combine your time frames, because if I was just focusing on the 5 minute or the 1 minute, you're not even taking into account these higher time frame PD arrays that you're trading into. So really the first step that would support bearishness is a close below this 5 minute fair value gap. That's one sign, but that doesn't mean I'm going in there and shorting because we're still in this 15-minute fair value gap. Okay. So we're holding, holding. This is a good sign right here. This is the first good sign because we had this close below that 5 minute fair value gap. Again, I'm not shorting at this point because we're still trading into that 15-minute fair value gap. Now what I can do is actually put these side by side just so it is a lot easier to see. Let's do this right here. Okay. So at this point, oops. At this point, what we've done is we've closed below, again, this 5 minute fair value gap. And what have we done? We've also created a 5 minute bearish fair value gap right here. And I'll make that red just so it stands out a little bit more. But this 15-minute candle still isn't closed, right? You see how I fast forwarded to the next candlestick on the 5 minute time frame and this shot up right here? I'll do it again. This looks like it's closed on the 15-minute time frame, but it's not. This is still a live active candle because look how I go to the next candle on the 5 minute. This is a huge wick right here. So at this point, I need to see this 5 minute fair value gap hold right here and start to see immediate rejection. Because as long as we're still holding this 15-minute fair value gap, I can't take shorts. I need to see price willing to move lower quick. So by the time that this 15-minute candle closes, I know that there's a high probability that it's going to close below the 15-minute fair value gap. Because if I took a short right here, it's too premature. Because what we could do is blast right through this 5 minute fair value gap, and then this 15-minute would have ended up holding. And at that point, it's like, why did I short that? We were still holding that 15-minute, right? I need to see this start to reject right here and look for like my model on the lower time frames that's going to tell me that there's a really high probability that this 15-minute candle is going to close below the fair value gap. So now that we've hit this 5 minute fair value gap, I use this as what's called a condition. So this is kind of like my line in the sand where if we hit this 5 minute, go above it and close, I would have to be bullish, right? Because we hit this 15-minute and we would close above this 5 minute, use it as inversion. If we hit this and on the lower time frame, I can confirm it with my entry, my model that we could potentially be moving lower. Well, then I would be certain, or that I would be um, somewhat certain that we would be closing below this 15-minute fair value gap with a high degree of probability. So now that we've hit this 5 minute, I'm going to go down to the 1 minute time frame here. And now in the 1 minute time frame, I'm going to be waiting for some kind of signature that supports shorts, right? Because remember, this previous day low, it's still intact. I want to see order flow shifting bearish to confirm that we would be drawing towards this and this 9:30 a.m. low right here. So we hit this 5 minute fair value gap, and what we've done right here is we've left a little bullish fair value gap on the 1 minute time frame here. Now if I make this a little bit bigger, I want to mark this out. And what I need to see at this point is price show me signs of shifting order flow to the downside. Where do I get that confirmation? Is bullish PD arrays getting disrespected. Now, another thing that I like about this right here is there is very little wick on this 1 minute candle, right? So that tells me that there was not a lot of manipulation to the downside right here. So this could be just like a manipulation higher into that 5 minute fair value gap right there. So with everything in alignment right there, if I get a close below this fair value gap on the 1 minute time frame, that would be my confirmation where I can take a short towards these lows right here. We didn't close below. We're still holding that right there. We got that close below. Now I'm good to short. So I'll sell right there. Stop loss would be good above this high right here. Take profit down to this previous day low right here. And now we're in shorts. And now this trade pretty much relies on this 15-minute candle closing below the 15-minute fair value gap. But I know that even though this candle is still open at this point, there's a high degree of probability that it's going to close below because we hit this 5-minute fair value gap and we've inversed this 1 minute right here. And then you can see at the close of this candle right here, and on this 15-minute time frame, this gave me really a lot of confidence that my targets were going to be hit. So at this point, I can move my stop loss to break even because once we swept this low right here, for me, that was a good break even point. I didn't want to see a sweep of that low and then trade all the way back higher right here. That wouldn't make any sense for me if price swept this low, went all the way back up into this 5 minute fair value gap at this high where my stop loss was. That just doesn't make any sense to hold my trade when order flow at that point would have shifted bullish. So at this point, it's really just letting the trade run towards take profit, and we had a really nice move lower at that point. So I'll show you on my live account with AMP that I actually did take this trade. Right there. So you can see in the bottom, this is AMP live. Took one contract right here. I actually got a really good entry because on the close of this 1 minute candle, when I was just going through replay right there, I waited for this next candle to open and manipulate higher first. So I got like right up in the upper portion of that wick right there. If I zoom in closer, this candle closes. This is really your go-to where if you see that close, that's where I'm entering on the close of that candle. This opened, traded higher. So I wanted to see that manipulation because if we think about how candles form, open, high, low, close, open, high, low, close, right? So we got that, and it was history from there where took profit at that previous day low, just like I outlined. So that is the breakdown for the trade of the week right there. If you were experiencing some hardships this week, or you found that price was uh, really difficult to navigate, and maybe you ended up losing on the week, or just some bad things happened, hang in there. This was a really, really tough week of price action. With this trade, I ended up coming out just a little bit over break even. I think I made about like 1R on the week. Before this trade, I was down because, again, this was just a really, really tough week of price action. It was not ideal. So if you got through it, really nice job. If you took some losses and got a little bit down on yourself, hang in there. This is it. This whole year really so far has been some really difficult price action to navigate through, just because of all of the new policy um, and things like that. So again, just hang in there, keep back testing, keep holding your head high because it will get better. But these type of market conditions really test your patience and helps you form discipline as a trader. You can take losses and bad price action at the beginning of the week. You can get frustrated and everything, but if you crash out from there and don't have risk management, well, you're not going to let the good days make up for the bad days. So you got to be able to limit yourself on the bad days. It's really like elementary knowledge. I know if you're listening to this and you've been trading for a long time or even a short amount of time, you probably know that and have heard that, but it really is how you get through these shitty weeks of price action. So, again, just hang in there. Hopefully, you found this helpful, and good luck trading to you.